Hi, welcome back to the channel. In today's episode, I want to talk to you about the continuing damaging impact on the global economy of the war in Iran and one of the most astonishing developments that we've seen so far. This truly is unbelievable because the United States has now issued a 30-day waiver allowing the sale of Iranian oil for the first time since 1979. And just for anybody that's not very good at maths, that is 47 years ago. That in itself tells you just how serious this situation has become. So this is no longer just a war in the Middle East that has no relevance to your life. This is now a full-blown energy crisis, an inflation story, and has the potential to cause a global recession in 2026. But just before we get into all of those details, can I ask anybody that isn't already a subscriber to please hit that subscriber button, because it really helps me with the algorithm and also puts a smile on my face. So let's start off talking about what's actually happened in the war itself. The bombardment of missiles and drone attacks between Israel and Iran is continuing to increase in intensity. And at the same time, Israel has now ramped up its attacks on Beirut, stepping up strikes against Hezbollah in Lebanon, which is backed by Iran. So what started as a direct conflict between two countries has now expanded into a third country, and Lebanon is heavily involved. And it's been reported that over 1,000 people have already died in Lebanon and more than 1 million have been displaced. And we're now into week 4 of this war. At the beginning, the markets were hoping that this would be a short-lived event, and that hope is now fading. Investors are starting to realise that this could drag on, and we've already seen some significant falls in global markets over the past few days. And the longer that this war goes on, the greater the risk that it further impacts on the world economy. Because it's easy to start wars, but it's very difficult to finish them. And of course, the biggest single implication for the global economy is energy prices. Oil prices remain extremely high. We're now seeing oil trading above $105 per barrel, compared with around $60 at the start of 2026. So that is a huge increase, around 75% in a very short space of time. And it's the same story for natural gas. In fact, it's worse. Prices have surged sharply, particularly in Europe, where gas plays a critical role in electricity generation and industrial production. Gas prices have more than doubled since the start of this war, and that's where the economic damage really starts to feed through. Higher oil prices mean higher transport costs, higher manufacturing costs, higher food prices, and higher gas prices mean higher electricity prices, which feeds through to basically everything. So this is all going to result in higher inflation for everybody around the world. So this war is feeding directly into the cost of living, not just in Europe and the Middle East, but globally. You may have noticed it if you've been to fill up your vehicle recently, that the price at the pumps is a lot higher now. And in terms of the most shocking development in this war so far, as I mentioned at the start of today's video, the Trump administration has issued a 30-day waiver on Iranian oil, which allows Iranian oil that's already at sea to be sold into the global markets and even allows imports into the United States. And that's the first time that that has happened since 1979, since the Iranian Revolution. Prior to that period, Iran was working in conjunction with the USA, and then basically after the revolution, all the American companies lost their assets. So what we're seeing here is the lifting of sanctions that have been in place for almost 50 years on Iranian oil. And why is this happening? Because the global energy market is under serious pressure. Even after the previous waivers on Russian oil, there have been 2 waivers on Russian oil so far, despite the fact that the war in Ukraine is carrying on. So Russia hasn't actually done anything to deserve the waivers being lifted. The reason why they were lifted is that the USA wanted to stabilize oil prices. But oil prices are not stable, and the reason why Iranian oil is being brought back into the system is to try to keep the price down. And as I've just said, prices are sitting at $105, so it's not really working. Can you imagine what the price would be if the waivers hadn't been lifted on Russian oil and Iranian oil? We could be closer to $150, maybe even $200 per barrel. And the irony here is incredible, because the war in Iran is now actually helping Iran to sell more oil globally. because Iran has had a limited market since those waivers have been in place. It's been selling to China and places like Turkey and some other buyers here and there. Now, moving on to developments with other nations, Donald Trump has expressed frustration that more countries are not stepping in to support the United States. He wanted everybody to send ships to the Strait of Hormuz to try to open it up. And what we're seeing is a clear widening in international involvement now. The UK government has approved the use of British bases for US strikes on Iranian missile sites targeting ships. And this is being positioned by the UK as a defensive action. It's saying it's not getting involved in the offensive stuff, it's doing things to help defend. But this is still direct involvement in military operations connected to the conflict. And Iran has responded by warning that countries supporting these actions could face consequences. And we've already seen missile activity directed towards the joint US-UK base in Diego Garcia in the Indian Ocean. Now, those missiles were intercepted, but the message is clear: the war is spreading. And those bases are based somewhere called the Chagos Islands. And this has suddenly become a really important story, because one of the first things that Keir Starmer did when he took over as the Prime Minister was agree to transfer sovereignty of the Chagos Islands to Mauritius, while keeping control of Diego Garcia base under a long-term lease. Now, at the time, that sounded like a fairly technical geopolitical issue that nobody really cared about. I mean, nobody had even heard of the Chagos Islands. However, today, that situation looks very different, because Diego Garcia, who isn't a person, it's actually the base name, is now a key strategic military asset in an active conflict, and it's already being targeted by Iran. They want to take it out. So what once seemed like a background story of no relevance to anybody is now right at the centre of global military strategy. And it's interesting that Donald Trump came out and said that he didn't agree with the UK handing over the Chagos Islands to Mauritius, and the government has now actually done a U-turn on that. The deal hasn't been signed. So it's really interesting to see how this war is bringing up other issues in terms of geopolitics. Now, one of the big problems that we've seen so far in this war is the closure of the Strait of Hormuz, which is the narrow stretch of water that passes by Iran. Around 20% of the world's oil and gas shipments pass through that route every single day. And right now, it's effectively shut for normal commercial traffic, because nobody wants to take the risk of your tanker being blown up. Now, there are discussions about international support and naval protection and reopening the route, but the reality is much more complicated than that, because all it takes is one missile, one drone, or one mine to take out an oil or gas tanker. And once that happens, no shipping company on earth is going to want to take that risk. So until the situation stabilises, it's very difficult to see normal flows resuming, even if all of these countries like Japan and the UK and lots of other countries who are in discussions with the US at the moment do send their vessels over there and start to patrol the waters. That doesn't stop a drone or a missile being sent from the land and blowing up a tanker. And that's a major problem for global energy supplies. Now, in terms of the question as to when this war is ever going to end, Donald Trump has now indicated that the US may be close to achieving its objectives and considering winding things down. So it's basically saying, okay, we've had enough now, we're going to call it all off. But the reality on the ground looks very different. Israel is continuing to intensify its attacks on both Iran and Lebanon. And Iran is continuing to retaliate. Lebanon is now heavily involved, and the Strait of Hormuz remains closed because it's close to Iran. You can't get away from that fact. So whilst there might be political talk about ending the war, there is no sign of de-escalation at this stage. So the overall summary of today's video is that the war in Iran is continuing and actually is increasing in terms of its intensity. And the growing impact on the global economy is devastating. Energy prices remain extremely high. The conflict is expanding geographically, and the risks to inflation, growth and financial markets are all increasing. And those risks are likely to continue increasing on a daily basis. And this will have a long-lasting impact throughout the whole of 2026, because oil prices and gas prices and the price of transportation and shipping and insurance are all now elevated. And they're not just going to drop back down to where they were, because, as I mentioned in a recent video, Qatar, which is one of the biggest suppliers of natural gas through LNG exports, you basically convert the gas into a liquid and then you can put it onto ships and send it anywhere in the world. It's lost 17% of all of its facilities through the attack that took place recently from Iran, retaliating to Israel's attack on Iranian gas fields. So when you take out 17% of the global market, that has a massive impact. Just to put that into perspective, Russia's supply into the global markets is around about 3 or 4%. So the USA has lifted the waivers to allow Russian oil back into the global market to try to stabilize the price. But if you're losing 17%, and they're talking about that's going to last for maybe up to 5 years, the loss of that supply, then that's going to have a huge long-term impact on gas prices. We've already seen it on oil prices, and we haven't really seen any of this feeding through yet into financial results. So you're experiencing it when you try to fill up your vehicle, you're seeing that the price is higher. But all companies are currently experiencing higher costs. There's higher transport costs, higher input costs, higher raw material costs. So all of that will feed through into the results over the next 3 to 6 to 9 to 12 months. So companies will start reporting higher costs, lower profits. Therefore, we'll probably see stock markets coming off. Companies may actually be making losses. So there's huge long-term implications here that won't go away even if this war ended tomorrow. But unfortunately, it doesn't look like it's ending tomorrow or any time in the near future. So I'll keep you posted on any further major news and developments as and when they occur. But hopefully you found today's video useful, informative, and most importantly, thought-provoking. If you've liked what I've said, or maybe you didn't like it, but you've been interested in it, then please give me a thumbs up. Please subscribe to the channel if you haven't done so already. Don't forget I'm currently running my competition where you can win my property or a cash alternative prize. Have a look at the QR code on the screen now or click the link in the description below if you'd like to get involved in that. I've got some really exciting offers on at the moment. Thank you also to everyone that supported me in other ways. If you've bought me a coffee or sent me a YouTube super thanks or signed up as a patron or a member, thank you so much for that support. Really does help to keep me going. And here's something to put a smile on your face.